Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today, weekend edition. Today is Saturday, January 31st, last day of the month, and the market has closed for the month. So we're going to take a look at daily, weekly, and monthly charts. So we got a lot to cover today. We're going to look at a lot of the markets, a lot of the indicators, and then the top 2 percentage movers and top 2 to the upside, and the 2 percentage movers to the downside that I had in terms of following yesterday's action. All right, I have got silver Wheaton on the screen, and we'll come back to that. We're going to start off with the Dow like we always do. So the Dow was down 251 points on Friday. So remember on Thursday, I said we looked at this bar and I said looks kind of like a reversal bar, but I said, you know, it did in other places too, like right here in October. And what happened the next day? What happened yesterday? Okay, so this looks ominously like here in October. Now, I'm not saying that just because it looks exactly like that we're going to get this, but who knows? And we did close right here on the low, near the low of the day and near the low for the week. So we'll look at this. The moving averages are rolling over. The 10s below the 21, below the 55. So the short term and the intermediate are now to the downside. We're still all above the 233. So the long-term trend is still up. The short-term and intermediate trend on the Dow are down. Okay, and I'm sticking with this count, although I'm a little skeptical that it's really intermediate 3, and I've got to go back and take a real hard look at all of the wave action since March 2009. The New York Composite, I am now starting to believe, gives us the more accurate picture of the wave, and we'll talk about that in a minute. I could spend a lot of time talking about the whole wave picture and where we're at from a years and decades standpoint, and I don't want to take up a lot of time on this video to do that. I think I may create another video just devoted to that. All right, not this weekend though. All right, so this is the S&P 500, similar type picture. You know, we're rolling over, coming down. I am now keeping the count like for the Dow that I do believe the fifth wave up here stopped, and the real question is this the end of the entire move from March 2009? Or is this just, you know, the end of another wave structure and we're getting a corrective action and then going to resume? So we'll see. The key is watching the wave count to the downside here, and does it continue down? How does the wave count look when it does that? That's going to be all key. Now you see these overlapping waves. This is clearly corrective action. It looks like an A, B, C to me, and that we're getting another leg down, kind of like this leg here. So we'll see if that plays out. New York Composite, NASDAQ Composite, sorry. Again, not nearly as bearish looking as the others in terms of the way the price action's playing out. New York Composite, one of the more bearish, and I'm staying with this count. I do think that we kind of peaked here. This was the high close. And now, I mean, this it's not taken out. You know, this is the next target, in my opinion, to continue a bearish type mode. It needs to take out the December low. And then, of course, the next target will be the October low if we continue to the downside. Russell 2000, this was the biggest drop, percentage loser on Friday, down 2%. Okay, so here was the close, 1190, and here's the close on Friday. So 1190 on Thursday and 1165 on Friday. So big percentage drop for the Russell 2000. This trend line is indeed seeming to be fairly formidable in terms of repelling, and it's not been able to trade above that trend line, and that's the trend line from March 2009. So it kind of makes you wonder. All right, let's take a look at the weekly on the Dow. Let me make sure I'm not missing something here. You know, getting a close here below several of the last weeks. Matter of fact, this is the lowest close, oh gosh, since this week, because we closed below this week. okay, in terms of a close. So this is the lowest close since October 24th on the Dow. So, you know, pretty negative action. And this is actually the first close. I mean, look at how it's closing below the 21-week moving average also. So not only are we getting a 2 out of 3 closes below the 10-week, we're getting below the 21-week. S&P 500 weekly, similar type action, similar type close here below the 21-week moving average. Actually, this one I've got in here as a 20, and I need to change that. I think that's because of the weekly. It should be a 21, and I'll go back and change that. Let's go to the NASDAQ. Now, here's the NASDAQ. Let me blow this up. I'll come back to the indicators. The NASDAQ is also closing below the 10, and, you know, kind of an outside. Let me blow it up a little bit. Almost looks like an outside down, although it looks pretty equal. It's not as big of an outside down type day that you'd like to see in terms of a bearish engulfing, but clearly, you know, just a reversal of the entire last week action. And then when you look at it on, you know, again, we've had this divergence that's been sitting here on 2 out of the 3 indicators. Not so much here. We're not seeing it between these 2 highs, okay, but we are seeing it on the RSI and on the demand index. All right, let's take a look at, let's see, the Russell 2000 weekly. And again, this is the strong picture that shows how the, you know, has not been able to get above this trend line, and now we've got the Russell closing back below the 10-week moving average, but again, not as negative as the New York Composite. All right, now I'm going to look at the monthly charts. Okay, the biggest thing that jumped out at me on the monthly charts is this little formation here. This looks like, to me, an evening star. I mean, I'd have to go back. I haven't gone out and double-checked this, but this looks like an evening star to me when you get the bullish bar, and then you get this doji type bar, followed by a bearish bar, okay, to the downside. Now, ideally, this would have maybe a gap up, you know, the doji is separated by a gap between these 2 bars, but it doesn't necessarily have to be. And I think that it's very similar to the top over here in 2009. Now, this was October. The doji was in for the month of October 2007. And our doji was December 2014, 7 years after the top, which is interesting, which this one was 7 years after the previous top in 2000. So this is kind of interesting. We're getting some ominous signals here, and I'll talk. I've got another one that actually just blew my mind when I looked at it, and I've been wondering if it was going to show us, and it did. So now the S&P 500 monthly is a similar type thing. Look at the similar type look. Now, you didn't see it over here nearly as clear, okay? This was not nearly the doji. It's kind of a doji, small, but not nearly as clear as this is right here. So I think those are the main things. Let me look at the NASDAQ composite, the NASDAQ monthly, and okay, there we go. Yeah, the big thing on the NASDAQ monthly is, you know, we're seeing this fairly clear divergence on the RSI and DI+, okay, with the NASDAQ monthly. So this is kind of signaling that, yeah, it's continuing to trend to the high side. No, it's not closing below the 10, but you know, it's doing it on weak indicators, okay? So the indicator picture is weakening. Let me go back to the Dow monthly for a minute. Well, this one didn't close. Oh, I know which one it is. Let's go to the New York Composite. New York Composite monthly. Okay, this is interesting. So not only are we getting divergence on the RSI on the New York monthly, which we got at the top in 2007. We now have a close below the 10-month. I'm sorry, we're looking at monthly. This is the 10-month moving average, the blue line, okay? So we now have a close below the 10-month. That hasn't happened since back here in May. Now, here's what, so it happened in May of 2012. It happened here August 2011, May 2010, and here was the first one back in January 2008. Okay, so there have been 4 instances where it happened after being up and above, okay, and then it broke down below for the first bar. 3 out of the 4, the following month was down. Okay, so this one here, the next month was up. But this one here, the next month was down. This one here, the next month was down. And of course, January 2008, the next month was down, and then the next month was down. Then we got a little bounce, and then everything went to hell in a handbasket. So the real question is, you know, what's this telling us? What's happening now? So the fact is, we got to close below the 10-week. So 3 out of the 4 last times that this happened, we got a down month for the next month. So it's going to be real interesting to see if that's what we get for February also. All right, so let's see the next thing. The last one we're going to take a look at is the Russell monthly. I'm not sure that it's showing us anymore, and let me find it. Okay, here we go. So again, this is pretty clear, the trend line on the monthly, which is the same trend line that I draw for the weekly and the daily. And, you know, it just cannot seem to get back above this trend line. Now, that may change, but right now this trend line is looking pretty strong as an indicator that breaking this and riding it along this is pretty good resistance. Okay, now we're going to take a look at some of our indicators. Okay, short-term trading index, 1.4 yesterday, closed. The 10 days pulled back down a little bit. But again, we didn't get a two in a row or 2 out of 3 up above 2 in terms of individual day signals. So not sure that this is really telling us anything other than, you know, being the 10-day being above the green bar puts it into that category of a possible short-term bottom. It just doesn't seem to be showing up with a lot of other things. And I'll show you why here in a minute. Let's look at the VIX next. The VIX, this is interesting. The interesting thing I saw about the VIX when I noticed this is all the markets closed on their low for the day, kind of like what they did on Thursday. And notice how the VIX closed on its high, but it didn't close on its high on Friday. So I'm not sure why that happened. You know, because you would think that this would have closed up here near the high for the day on this of extremely bearish action. So I don't know if that means that there was just, you know, and I wasn't watching it super closely like in the last half hour. They may have had some sell programs that just smashed it in the last, you know, 15 minutes or a half hour or something. And therefore, this may not be as bearish a close and we get a little bounce. I don't know. I don't know. But this is still up, you know, for the day. And still starting to trend and closing above the 10 and moving up a little bit, you know, and trying to make a run for these highs. So we'll see. Let's see. The next one we'll take a look at is the high-low index. And this is really interesting. I mean, given how negative the market was down 250 points on the Dow, and we still had 106 more new highs than new lows. Now, it is starting to trend down some here, and we got this little what we call fish hook, what I call fish hook action. So when we get this little like fish hook type action in here, my expectation is I'm looking for the next move down. Okay, fish hook, fish hook, fish hook, fish hook, you know, fish hook, fish hook. So when I see this little fish hook type action, I'm expecting the next move to be downside, which would imply that, you know, either more new lows than new highs, which would imply selling, etc. So that's what I'm looking for, and we'll see if that happens on Monday. And let's see, just as a note, the 10-day put to call ratio on the equity put to call is 0.67. So again, it's not at an extreme one way or the other. It's in a neutral zone. All right, let's take a look at the Okay, here's the Market Vector Semiconductor ETF, SMH, and you can see again this is sold off the last week, closing near the low for the day, near the low for the week. Fairly negative looking. Let's see on a weekly if we just convert it to weekly real quick. Yeah, we're getting a close down. You know, it's the lowest weekly close on the semiconductors since November 14th. So it may be starting to roll over, although you can see that still the trend lines are still to the upside. So that is the semiconductor. Now let's find the home builder. Okay, the Spider S&P Home Builders ETF. Basically, it kind of reversed back down from Thursdays and closed actually a little lower than where it did on Wednesday. So, and you know, this is kind of, again, I talked about this being volatile looking. Let's look at it on a weekly basis. Yeah, and it's not, again, it's kind of doji bars the last 2 weeks. You know, had this big ranging bar here outside, what I call an outside down day, because it was outside the previous week, previous bar, and it was down. Okay, so they call this an outside down day. Now we're getting dojis following that. So it's not looking like a bearish scenario, I mean a bullish scenario, so we'll see if we get follow through to the downside. All right, and the last one is the financial ETF. Okay, and this is starting to get negative. All right, so now we're right at the 233-day moving average, okay, closing right on the low almost, and on, you know, low for the week. So this does look like it's starting to roll over. If we convert it to a weekly, you can see now we've had 1, 2, 3, 4 weeks in a row below the 10-week moving average. The last time that happened was, here's 3. Might have been back here in August 2013, not sure, but you know, and again, you know, we'll see. We'll see. Are we starting to get the 10 breaking below the 21? Let me look at that. It's right at it. It's in the numbers. It's right at. So you know, we'll see what the price action brings us. But right now, it's, you know, it's definitely trending to the downside, at least short term. And of course, the intermediate term, when we see the 21 breaking below the 55, that's my kind of intermediate signal. It says, okay, now intermediate's going to the downside too. Now we're making a run for the 233, and then the question is, do we start to get down and trade down below it? All right, now I want to bounce and take a look at some of our key markets like the US dollar. Okay, here we are at the US dollar index. So, you know, the beginning of the week kind of bounced down, pulled back a little bit, and then rallied back. So we're really, I think, unchanged for the week. Although, man, this thing is like a rocket ship. I mean, look at this on a weekly basis. But we are, well, we're up 0.04 for the week. So basically flat for the week. Now, but I mean, this thing is just going straight up. But, you know, are we at all-time highs? No. No, we're not at all-time highs on the US dollar. You know, there's back at 2000, 2001, you know, a good, you know, 20% plus, if not more, 25% above where we're at now. So, you know, but, you know, you know, you just don't keep these straight line moves going forever. Okay. So you're playing Russian roulette a little bit in that, you know, when you're in a straight line move, how long is it really going to last? And so you got to be careful, and you can kind of start taking a look at the wave count. It looks like we're in some kind of wave 3, but I have not looked at it from Elliott wave very closely. Okay, the next one we'll take a look at is the TLT, which is right here, TLT. And again, this one is continuing to push to the high side also. Now, this is continuing to push into record territory, which means we're continuing to push long-term interest rates to the downside. Let's take a look on a weekly basis. Look at that. I mean, it's just amazing. Now, I mean, this is how it looks over the last 12 years, and that's all the data I got in here loaded right now anyway. So yeah, again, this is also like a rocket ship. So Don't see, am I getting any divergence? And we're starting to get some divergence showing up in here on the RSI and on the DI plus, and it broke below the, when I see this sometimes, a lot of times that means the selling, there's a chance that the peak in the sell in that, whatever it is, if it's the red line or the blue line, the peak in that move is going to be coming to an end, okay? And so the buying, I have a feeling is going to start weakening out in here. And then when I start to see divergence in the RSI, that kind of confirms it in my mind. But we don't have a reversal in price action yet, okay? So we'll have to watch for that. We may be getting close. And let's see, the next one I want to take a look at is the high yield. Okay, so here's another one that if the market's going in the tank, you know, the high yield bonds ought to be dropping. And I'm surprised that they're not dropping more. But again, this could just be sideways action, which is really what we think about the New York Composite, how it's swinging sideways, only, you know, much bigger swings. Because the reason why this should be dropping is because it's risk off, you know. When people don't want to take on the riskier assets, you know, they're getting out of the stock market, they're getting out of the high yield bonds, they're moving to safety, and these are continuing to sell off. When the risk appetite is strong, then these are rallying and the market's rallying, etc. So right now, this hasn't been showing us much since mid-December or late December. It's the whole month of January. It's just not been showing us much. But again, what's the market been doing? You know, just wild swings over the last month too. All right, and the next one is the take a look at crude oil. United States 12-month oil. And again, we got the big bounce on crude oil on Friday. So big snapback rally one day. I think it was up a little over $3 a barrel. I'm looking at $47.85 a barrel on the futures markets. And then the last one I want to take a look at is gold. Okay, and I'm using GLD, the gold shares ETF for gold, and it had a nice snapback rally. Gold on the futures market closed 1283.70, up 27.80. Basically, this almost reversed exactly the entire move down that it did the day before. So here we got a little bit of a snap pullback. I'm thinking that this is a minor wave 4, and I'm thinking we're working 1, 2. Got this strong 3 with the gaps in it, gap, gap, you know, nice vertical type move. Now we got this really sharp pullback here. Now, the interesting thing on this, and you know, I've still got a half the position on the calls. When I looked at the reversal, the pullback, okay, wave 2 was deep, over 61.8%. All right. And the pullback, if I look as measured of the wave 3, if this is the wave 3 and it looks like it, we got 38%, just a little over 38.2%, which is what I would expect. I expect somewhere between 23 and 38 for wave 4 if wave 2 was deep. Okay. So now this is going up, and I've still got a head and shoulders. The head and shoulders target projects to 129 to 129.5. Okay, so we'll see if we get that, and we'll see how fast this thing wants to move. All right, and the last thing I want to take a look at is the surprise of the day, the Baltic Dry Index. Okay, here's the Baltic Dry Index, and this is an indication of global economic activity and the moving of goods around the globe and shipping, and this is going in the tank. Okay, so now you sit back and go, oh, okay, so, you know, it's dropped down. Well, the reading is 608. Well, this reading is lower than this reading in 2012, is lower than the bottom of the whole Great Recession in 2008. And as a matter of fact, this reading is the lowest reading since 1986. So we've now got the Baltic Dry Index telling us that the global economy is in contraction, and really, you know, you got to sit back and wonder, you know, what is really going on. And So we'll see whether the chickens come home to roost here on everything, market and everything else. So, you know, now I know that oil affects this. Well, back in 2008, oil affected this too. But guess what? Oil was dropping. Why? Because they had a lot of it and because the world was going into economic contraction. Well, I think the same thing is going on right now. We got a lot of oil and the world seems to be going into economic contraction. So, all right, let's take a look at the 4 stocks I mentioned. Okay, Chicago Bridge and Iron. We had a big collapse in Chicago Bridge and Iron. It was down 10% on Friday, and it was actually a lot lower than that. I think down as much as 14% at one point during the day. So really, this is continuing the trend, okay? And we've gotten no turn. The trend is to the downside. The 21's been below the 55. The 55 has been below the 233. You know, this has been long-term negative since back here in July of this year, and it's been intermediate-term negative since May of this year, the beginning of May. Okay, when the 21 broke below the 55. Okay, and then now we're getting this. You know, this big drop. Now we've had some big moves in this before, but not the huge one-day kind of move on this thing. So this is pretty interesting. And if I look to weekly, now, you know, if you start to get a big sell-off, I mean, can it go a lot lower? Yeah. I mean, well, look what happened in 2008, 2009, into 2009. So now, could we be getting support? Let me take a look at this real quick. We could be. I mean, here's where support came in back in June 2012, and that seems to be about where it came in this week. All right, the next one we're going to take a look at is Delta Airlines, which, you know, the airlines started to weaken, and then they popped it. Let me find it first. Okay, here's Delta Airlines. So, you know, it's starting to weaken. Almost looks like they're topping out. It's topping out a little bit. Same thing with UAL to a certain degree. And so we had a big down move, and a part of that is because of the bounce in oil, I think, is what's affecting this. Now, you know, we still have the 10 above the 21, above the 55. So the moving averages are still all aligned to the high side here. So we'll see whether this continues to weaken or not. Okay, so those were the 2 big percentage losers of the day. The big winner for the day, percentage-wise, was U.S. Steel. So U.S. Steel, again, topping after it had great earnings, and it rallied on the 28th and on Wednesday, and then we got this continued move as oil popped on Friday. So it's, you know, a nice rally in here, but again, all the moving averages are still aligned to the downside. So it's a little bit of a counter trend rally, and we'll just have to see whether or not it continues to turn. And then last but not least, Silver Wheaton. Silver Wheaton bounced back, had a nice percentage gain, 3.24% for the day. And looks like it barely closed above the 10-day moving average. It's still trending to the high side here. It almost looks to me, if we're working a third minor wave, 1, 2, third minor wave, this looks like 1, 2, 3, 4, and we're starting that 5th of the third. Okay, so we could be getting another pop to the high side. And if I had to guess, if I had to estimate, let me take a look real quick. If this is going to continue, the fact that, I want to go up here because it looks like this little minor wave 3, minute wave 3 extended. Go to the back here. I would have to say we got a shot at, up here in the, like, say 25.25 on this stock before minor wave 3 pops out. That would be my estimate up in this range. And of course, it could hit this trend line. If you extend that to the right, see what that trend line is. It's probably might run into some resistance right around there too. So that's the other thing to think about. So we'll have to watch that. All right, that's it for today. Long video. I will put out an index, and hopefully you've seen that so that you're able to jump to different sections of this video and get what you are looking for. So if you're watching this video anywhere else but my website, head on over, check it out, the posts and other good stuff I've got there for you. If you're not a subscriber, just click on the red box on the screen here and subscribe. And remember, stay focused, follow your plan, and trade without fear. Have a great weekend. I will be back tomorrow with trade ideas, looking at the trade ideas, and I will have that out hopefully by noon on Sunday because I'm going to be focused on the Super Bowl later on in the day. All right, everyone, this has been Joe from Beyond the Chart. Have a great weekend.